Brexit.
You mentioned uncertainty, and that's such a big thing. And we got an election year. We've got always seems like crazy things happen around the world, and oil prices and all these things. And we actually just got done taping a short piece about something you've just come up with, which you call your 25-cent contracts, which I believe is kind of an option play, but you're really a macro person. I'm just wondering if you could maybe explain just briefly what we talked about, and also how does that play into this worldwide volatility? And by the way, we taped that piece. It's not going to be on YouTube or on our website, but there's a link below. It's londonreal.tv/Nomi. That's Nomi if people want to watch it. But what is that all about?
Right. So one of the things that I have done since leaving Wall Street and leaving the banking environment from respect to working for any of those institutions is I've been writing, I've been doing journalism, I've been speaking with governments throughout the world and institutions as to how better they can position themselves to help the real economy, to help like real people on the ground. So my entire sort of focus has changed to be about that, to exposing what's wrong and to also helping people on the ground. And one of the things that I actually realized when I left Wall Street is that, you don't get paid as much, right? I mean, it's very simple. It's like there's a lot of money that's coming into banking positions that one can make, but when you make the decision, as I did, to leave all that, I also want to do my journalism. I want to fund it and things like that. So I look at very carefully at how I've invested the money and protected the money that I've made since then so that it can last me, so that I have the freedom to do journalism, to be a whistleblower and so forth. And that freedom is really important to me. So one of the things that I've developed in this trading system is I've taken sort of the analytical mathy stuff that I did, the wonky stuff that I did.
Which is what your specialty was.
Which is what I did.
I mean,
yes.
You ran these big quant departments, what we call these rocket scientists.
Yes.
I mean, that's why I got recruited at MIT to go to Wall Street at Bankers Trust, because they were looking for these math quants, and you had 30 of them working for you.
Yeah, I mean, in London, they were incredibly, gifted intellectually and mathematically and statistically. I myself, my graduate degrees are in statistics and operations research, undergrad in math. So that was always, yes, my kind of angle into Wall Street relative to trading or sales, which was some of the other types of jobs on Wall Street. It was always about the math, the trends, the numbers, the securities, and how they behaved under certain conditions. And that's always what I looked at throughout my entire career on Wall Street. And I always also looked at the downside, not what happens if a trade works, but what happens if it doesn't work. What are the risks you should be looking for, and how can you best sort of protect that investment for those risks? And so that's a lot of what I did. So leaving, I wanted to protect what I had, again, so that I could continue to do what I do and be free to do that and say what I need to say in the world. But also I've realized over the years that people don't have the same exposure to the sort of bigger trading systems on Wall Street. I mean, yes, they might have a brokerage account, but they don't really have the ability to create their own systems. And so I looked at what are some of the ways that I can create something that they can use, like regular people on the ground can use to access some of what Wall Street does all the time. And it's a little bit like swimming. I mean, I'm a diver and stuff. It's a little bit like looking at sharks. And consider Wall Street bankers like sharks, right? I'm sure that's not a big leap. And in the ocean, there are these things called shark scrubbers, right? And they're actually little fish that look exactly like sharks.
Yeah, I've seen
them. But they're tiny.
Yeah, they swim alongside of them.
They swim alongside. And they actually like suck out the sort of nutrients sometimes from the shark. From the shark itself, like the sides of the sharks, and they also swim beside them to get those nutrients. So they kind of like shade the shark as the shark's moving around doing its thing, but they're tiny. And so the way I look at systems that can help individual people is that you kind of have to be aware of what the sharks are doing, because they're doing it. They're moving in the market sense, they're moving the markets, but also you can sort of be alongside of them and sort of be observant and sort of extract some of the value from those types of trades, especially when they're going fast. So right now we have a situation where there's a lot of volatility in the market. And what I see is momentum, like accelerated speed of how trades are happening, how geopolitics is affecting the market, how the vote on Brexit or something that happened between the trade wars of US and China manifest in the market on a regular, ongoing basis, right? And so to me, how that happens is like those little shark scrubbers that are swimming next to the shark. They watch how the market reacts, like the big sharks, how they're in there, what they're doing, but they can kind of be a part of it without being in the middle of it. And so that's what I've done in this particular system that I've developed with something called 25-cent contracts. They're a very cheap way of taking an investment or taking exposure into the market, particularly in times of volatility, that take into account what the big sharks are doing, that take into account why volatility is happening, and a bunch of other parameters, some more analytics, and presents a way for a person to take advantage of that scenario in a cheap way and in a fast way and in an easy way with these 25-cent contracts or option contracts, basically. I think that we're starting the beginning of a prolonged period now of a recession or even worse.
Hi, it's Brian Rose from London Real. I recently sat down with Nomi Prins, the former Wall Street trader you would have seen on Fox, CNBC, and Bloomberg Television. She regularly advises the Federal Reserve, IMF, and World Bank on important financial policy matters.
I've realized over the years that people don't have the same exposure to trading systems on Wall Street. And so I looked at what are some of the ways that I can create something that regular people on the ground can use to access some of what Wall Street does all the time.
We had an incredible conversation, but what really stood out to me is her brand new 25-cent contract strategy, designed to leverage a little-known market anomaly that happens every day around 10 a.m., if you know what to look for.
The more comfortable you feel with financial elements, the better you'll be at managing them, and the more confident and empowered you'll be in your own life in any aspect of your life, not just with respect to money.
Now, as a former Wall Street trader, I am super excited to share this investment strategy for the very first time. As the host of this episode, I'm able to offer you exclusive rights to a seat at her 25-cent contract live training. But you must act now to secure your spot. So click on the link below or go to londonreal.tv/Nomi, that's N-O-M-I, to secure your spot. And I will see you there.
I myself, my graduate degrees are in statistics and operations research, undergrad in math. So that was always, yes, my kind of angle into Wall Street relative to trading or sales, which was some of the other types of jobs on Wall Street. It was always about the math, the trends, the numbers, the securities, and how they behaved under certain conditions. And that's always what I looked at throughout my entire career on Wall Street. And I always also looked at the downside, not what happens if a trade works, but what happens if it doesn't work. What are the risks you should be looking for, and how can you best, sort of protect that investment for those risks? And so that's what they're a very cheap way of taking an investment into the market, particularly in times of volatility, that take into account what the big sharks are doing, that take into account why volatility is happening, and presents a way for a person to take advantage of that scenario in a cheap way and in a fast way and in an easy way.